6 ways to grow your money without risking it in business. Point number 1, open a savings account. A savings account is one of the easiest ways to grow your money. Basically, a savings account allows you to store your money securely whilst earning interest on it. In a sense, you are lending your money to the bank so that they can offer loans to their customers. So the bank pays you a little interest as a way of saying thank you. You can withdraw your money at any time from your savings account. However, there is a limit on the number of free withdrawals you can make each month. Withdrawals beyond your monthly limit attracts charges. Interest rates on a savings account are usually very small, ranging from between 2 to 10% depending on the amount involved. Savings accounts come with the least risk. You are almost certain that your money will be safe no matter what happens. You need very little amount to open a savings account. Some banks even allow you to open it for free. Point number 2, buying Treasury Bills. A Treasury Bill is a short-term investment product offered by the Bank of Ghana or the bank of your country on behalf of the government. You can invest for either 3 months, 6 months, or as long as 1 year. This is 91 days, 182 days, or 365 days. Simply put, when you buy a Treasury Bill, you lend money to the government of your country. When the maturity period is reached, the government repays the amount it borrowed from you plus the given interest rate at the time it borrowed the money. The interest rate associated with the money you lend to the government depends on how long you lend the money for. Here are the interest rates as at the 19th of July 2021. 91-day Treasury Bills goes for 12.175% per annum. 182 days goes for 12.52% per annum, and then 1 year Treasury Bill goes for 14.14% per annum. You can check the current rates from your central bank or simply visit their website. Here are some reasons why you should consider buying Treasury Bills. Treasury Bills are risk-free. They can easily be converted to cash or even be used as collateral to take a loan. The interest rates are much higher compared to a savings account. This is obvious. You can collect your interest on the day you purchase the Treasury Bill. To buy Treasury Bills, just walk into any bank with your money and complete the form. You can buy Treasury Bills starting from as low as 10 Ghana cedis in Ghana. In your country, it could be as low as $10. For more information on Treasury Bills, visit your country's central bank's website. Point number 3, open a fixed deposit investment account. Fixed deposits are like Treasury Bills, but this time you are lending money to the bank and not to your central government. For fixed deposits, you open an investment account with a bank and deposit your money into it at a fixed interest rate for the period of the investment. Different banks have different tenures, that is the maturity periods, but the most popular ones are 90 days, 180 days, and 1 year. Some banks go as far as 2 years. The interest rates on your investment and the minimum amount of money you need to open a fixed deposit account varies from bank to bank. The interest rate also depends on the amount you are investing and the maturity period. For instance, for Carl Bank, the interest rate for an investment between 5,000 and 49,999 Ghana cedis for a 3 months period attracts 14.15%, and you need a minimum of 5,000 Ghana cedis to open the fixed deposit account. Whereas for Standard Chartered Bank, the interest rate for an investment between 20,000 and 40,000 for a 3 months period is 7.5%, and you need a minimum of 1,000 Ghana cedis to open the account. These 2 banks that I've mentioned have not sponsored this video in any way, and I am not recommending them for you to go and do your fixed deposit investment. Shop around and pick the bank that suits your interest. Some banks will allow you to withdraw from your fixed deposit account, while some banks will not. Banks will, however, charge you a penalty if you decide to terminate your investment before the maturity period. You can check out the websites of each bank to find out the specifics of their fixed deposit accounts. Here are some reasons why you should consider opening a fixed deposit investment account. Fixed deposits are very low risk. They can easily be converted to cash or even used as collateral for a loan. The interest rates are higher than savings accounts. If you are investing a very large amount, you can negotiate the interest rate. Point number 4, buy shares or stocks in a company. Shares are investments that you make in a company in return for dividends. When you buy shares in a company, it means you own part of that company and you get a percentage of the profits the company makes depending on how much of the company you own. Shares are generally high risk investments since there is a chance that things could go very wrong and you could lose all your money. Also, the value of your money can depreciate or appreciate depending on the circumstances. In Ghana, just like in your country, if the company you want to invest in is listed on the Ghana stock market or the stock market of your country, then the stocks are regulated by the central government through the stock exchange. Before you buy shares in any company, it is best to solicit the advice of experts known as brokers in order to make the best decisions, especially on which companies to invest in. Point number 5, invest in mutual funds. A mutual fund is a company that pulls together a group of people's money and invests it on their behalf. Mutual funds are also called collective investment schemes. Investing in mutual funds allows individuals to pool resources with other individuals and investors in order to create a greater buying power. The funds gathered are then invested into stocks, bonds, and other assets. The interest rates for mutual funds are generally high. Some go as high as 20%. The advantages of investing in mutual funds are that your money is managed by professionals who can make the best financial decisions in order to grow your money at any circumstance. Also, mutual funds are affordable. The risk involved, however, is relatively high. Point number 6, bonds. A bond is an investment in which the investor loans money to either a company or even the government. The government agrees to pay back the loan along with an interest at a certain date, known as the maturity date. Normally, companies issue bonds to raise money for it instead of going to the commercial banks for loan. The interest rates associated with bonds vary, and it is relatively low risk because if the bond issuing company goes bankrupt, all debts and bonds are paid before any equity is paid. So in summary, here are the 6 ways you can invest and grow your money without necessarily starting a business with it. Open a savings account, buy treasury bills, open and invest in fixed deposits, buy shares or stocks in viable companies, invest in mutual funds, and buy bonds. If you are visiting our channel for the first time, do subscribe to our channel so you can get notified about our videos whenever we publish them. Thank you so much for watching. See you in our next video.